A tale of two markets. The American housing realm remains in a paradox. The months of June saw home prices soaring to all-time highs of 435,000, while sales plummeted to a 9-month low as transactions fell 2.7% from the previous month. So what does that tell us? It tells us that sales are down, but values are staying high. And there's a certain amount of demand that continues to allow that to happen in this market. And that's why it's a tale of two markets. A lot of people feel like it's a buyer's market 100%. I should get everything and ask for the moon and get concessions and repairs and reduced price offers. And then sellers, they think to themselves, we should have the same amount of net proceeds of what people are getting a few years back. And in reality, if you have a need to sell, you need to sell for a price that you're willing to accept. And stick with that and make sure that there's a sale that's going to happen with a willing buyer and a willing seller. The market continues to move forward. So as NPR's Laurel Walmsley explains, that isn't the typical story of supply and demand. It's a tale of two markets operating in parallel. While the housing market split into distant camps, on the one side are cash flush buyers having reaped substantial equity from previous home sales, snapping up properties often without financing, these buyers representing a whopping 29% of all transactions in June, wielding their financial power to outbid mortgage-dependent competitors. Those who have housing equity can make housing trades right now, explains NPR's Jessica Louts. Many of them are doing so even with all cash purchases. They have the ability to interact with today's housing market where first-time home buyers are being shut out. And it's true, especially in scenarios with a house that might be in really great condition and where the price is attractive enough to a first-time buyer to even consider going up against a cash buyer. And previous experience, when we're working with our sellers, we're getting multiple offers over asking price still today when it's priced correctly and when you have a really nice house. And so if you're one of those people who's got a nice house and you're willing to price it correctly, we'll end up with multiple offers. And so we can weed out the ones that might have potential situations that could cause the contract to go south. And so you want to choose the best contract to have the best opportunity of best chance of closing. And so is it a matter of haves and have-nots? No doubt about it. Rising wages and record stock market gains have created a wealthy buyer pool that remains largely insulated from affordability concern. These buyers are driving activity in the luxury segment. Just got done touring a $4 million house with the TRLP. We're doing a Selling Sunset parody. It's going to be pretty funny, and I'll have a link to that in later videos once we get done filming that. And so there's a wealthy buyer pool. There's a lot of people with a lot of cash, and these buyers are driving the activity where homes above $1 million saw sales jump 14% year over year. An estimated 8.5% of U.S. homes now carry $1 million price tags. 8.5%, according to a Redfin analysis. And so for the rest of us, the market presents an increasingly insurmountable barrier. Median home prices have climbed 48% just in 5 years. 5 years, 48%. That is a lot. And so people are thinking to themselves, well, it's going to crash. It's going to crash. It's got to come down. It's got to come down. Well, not if people continue to buy and if money continues to come in and there's jobs. First-time buyers usually have the housing market growth engine manage just 30% of transaction. So first-time home buyers, 30% transaction, despite representing the largest pool of potential purchasers. So each percentage point increases in mortgage rates can add hundreds of dollars to monthly payments, pricing out entire segments of the market. And so a family once could afford a 3% interest rate suddenly finds themselves unable to qualify when rates double. And we have now we're facing something called the lock-in effect, where existing homeowners feel like with the low rate, they refuse to sell and take a higher rates. So that constricts the supply. And let me just put other end of the coin, that is that people that might have low interest rates, remember interest rates have been below 5%, 4% for a very long time. And so say somebody bought in 2013, 2014, 2015, 2019, they still have really attractive interest rates. They also have a significant amount of equity gain going back to that median home price increasing 48% in the last 5 years. So with that, if you're sitting on a lot of equity, the rate doesn't matter because you can sell it and you can cash in on your equity and you can go buy something nicer. You can go buy something that's the downsize you're looking for, or the closer to the work, or closer to your family, whether you're looking to be closer to in-laws or closer to kids. Either way, we want to help you in that effort. And in this market, it might be a little confusing, and we're just hopefully here to answer some questions that help you guys. So don't feel like you have the lock-in effect. Feel like you have the equity effect, and that you can make big decisions that are gonna do great things for you and your family, whether that be dreams of buying land with a nice house on it, or a lake house, or something made more low maintenance. Whatever that dream may be for you, we want to be here to help you at the McKee Realty team. And so there is contact information below. There is email also. You can reach us. We would love if you would subscribe to our channel. And while national headlines focus on prices, local markets paint a slightly different picture. And so I've been in the DFW market for my entire life. And so I've been an investor for over 10 years as a real estate investor in the DFW and the outskirts. And so there are still transactions happening all the time, daily. And it is still a very healthy market. So if you're considering selling, now is a great time, because there are buyers looking for houses also. Even though there's that high interest rate, because there's other people who are willing to trade up and trade down. There are a lot of contingencies going on. And so that's an exciting time, because that means realtors with experience like myself that have gone through those transactions where you're working with helping them sell and buy at the same time, that is a very great opportunity for us. And so we want to take advantage of that and be here and answer any questions that you have about this. So please schedule time with us. Our Calendly link is below. And so try not to pay too much attention to the national headlines about steep price drops and federal job cuts and what's going to happen with the economy, because it's very healthy right now, actually. And we're seeing we know that there's still a broader affordability concern, but we are still seeing a lot of movement in the marketplace. And so what Redfin's Marshall Park says is, we're seeing signs of price sensitivity as higher interest rates force buyers to reevaluate what's affordable. And that's true. And so you look at what we do is we're going to look at your net proceeds on your sale of your home, and we're going to see how much you're willing to put down on the next house for a down payment, usually 20% in these cases where you're coming from a previous sale, because that's going to help you avoid your premium mortgage insurance, help you keep your payment lower. But remember, interest rates are higher. And so you're going to see a higher monthly payment than what most people might have been used to in the years past. And that's a significant thing to overcome in your mind is, well, we just went from maybe a $2,000 a month payment that we've been doing for the last 5 to 10 years to now a $3,000 payment. But you got to keep in mind that a lot of the time people are trading up, they're taking equity, they're putting it into something nicer that they wanted. Maybe it's a farmhouse on 10 acres, or maybe it's a house with a pool that's 1 story, or they're looking to just get new construction closer to family with new construction, and so they can take that, put it into a large down payment, and then we can calculate what your new payment's going to be, and we can figure out what it is within a couple $100, usually even closer to the closing day. You'll get all of the financial information from your mortgage company. But if you're someone who's paying cash, that is still king. And so we love working with our cash buyers too. And we're super grateful for all of our current clients. And it's really a bizarre twist, as new homes now cost less than existing ones. So that's what I was saying with the new construction. We have a lot of buyers that go and they just want a new construction house because it is in great condition and they can offer better interest rates. That is true. That is definitely true. And so what's the Fed going to do? That's the big question. And in a week or so, we'll have more information on that. We'd love to share our opinion on it. So please subscribe, reach out to us, and let us know if you have any questions. This is Jeff McKee with the McKee Realty team. Thanks in advance, Jeff.